Welcome back, everyone, to the Schaefer Stock Market Podcast. I am Josh Selway talking to you again. We have so much to get through this week. It's been such a busy week in the stock market. I've continued to add to this show's outline. There's just so many things I want to talk about, so I'm going to jump right into it. We're going to start with two huge winners from this past week in the stock market. The first one is this company called Soliton. Soliton. S-O-L-I-T-O-N. is how it is spelled, and the ticker is SOLY. This company just went public earlier this year. Around $6 per share is where it began trading, and it's surged this past week, first because the FDA approved its tattoo removal device, and this is the device it's known for. It's called a rapid acoustic pulse device. I don't really know how to explain the science properly, so I'm not even going to try. According to the company's website, they value the tattoo removal market at $4.8 or so billion. So a huge market to address here. Right now, if you have a tattoo and you want to get it removed, it's this long, drawn-out process. It's quite inconvenient. So they believe with their rapid acoustic pulse device, you can get rid of your tattoo in as little as 2 sessions. So that'll make it a lot easier. And not only that, Soliton is also in the cellulite treatment market as well. They just got proof of concept approval, showed good results there for cellulite diminishment with this same device. So basically, you just put it over the skin, shoots these sound waves, I believe, over your skin, and it apparently can get rid of the cellulite, which right now is another, if you want to get something done to get rid of your cellulite, like the tattoo removal, it's a long process, and this makes it much easier. So Soliton's hitting these various markets. I'm not sure if they are eyeing anything else, if they can use this device for other procedures. The stock has just blown up. As I said, it went public back in February, started trading around $6 per share, and it fell back to those levels in recent days before it exploded up the charts. And when its device was approved for the tattoo removal, it shot all the way up to about $15. And then on this proof of concept news for the cellulite treatment, it shot up to around $30 per share. So 300% gains or so for this stock in just the past week. It was last seen hovering around the $20 level. The market cap's around $340 million or so. So this will definitely be a name to watch going forward. Huge gains, and it's holding those gains. It gave back, like I said, it traded up around $30 per share. So it's giving back some of those gains, but still holding in the $20 range is quite impressive for the stock that just a few days ago was at $6 per share. Another stock that made huge moves this past week is Power Conversion Specialist LTIC, ticker ELTK. That stock exploded this week. It was trading down around $1.50 so per share, and it shot all the way up to around $11 per share. So just astronomical gains here in just a matter of days for this stock. The company came out with a new savings plan. It said it identified a number of areas where it could save a lot of money. It said something about they've identified these areas where they were losing a ton of money, so that's always a good thing. It believes that this new savings plan could save it around $15 million or so annually. It also is going to be cutting 20% of its jobs. So that stock is all the way up, as I said, around $11 per share. This is an interesting company. They are based in Norway, and they have exposure to a number of different sectors, interesting business areas here: telecom, data center, power and utilities, railway, metro, and rural electrification, as it says on their website. So those are all fast-growing areas here, and if this savings plan really can identify the company's main weaknesses and help it grow. They did even raise their outlook for the coming quarters as well, so this will be a name to watch for sure in the months ahead. Now, I want to touch on a few names in the commodity space that have really been affected by the trade tensions with China. Now, what's come up recently with the U.S.-China trade spat is that China may cut access to its rare earth production and supply. China produces like 92% or something like that of the world's rare earth minerals, and these are used in all types of different things, from cell phones to military supplies, all types of things, military weapons. China, that could be their next weapon in the trade war if they try to cut off access to those, and that's had a dramatic effect on the market. That those stocks in China have shot up. Obviously, if you cut the demand down, that increases the value of their products. So those stocks have been interesting to watch in China. Domestically, a couple of ETFs that we've been watching here based on this news are the Spider Metals and Mining ETF, that is ticker XME, and then there's the Vectors Rare Earth Strategic Metals ETF, REMX. So yes, there's even an ETF for these rare earth names, and to get exposure to that space, there are literally ETFs for everything. So both these ETFs have struggled recently. In fact, XME has fallen to fresh lows. It's been a similar setup for REMX. We wrote about these ETFs over on schaefersresearch.com if you want to go check them out. The article we talked about them in was Options Traders Blitz 2 Metals ETFs amid trade tensions. It was interesting to see the call activity on both of these ETFs as speculation ramps up amid these trade tensions. We've also been monitoring the sell-off in steel stocks, and it's just been brutal for this sector. A number of negative analyst notes coming out on the steel sector, and one name that continues to get buried is United States Steel, that is ticker X. And just this week, in fact, it's trading at fresh 3-year lows. You had Deutsche Bank come in, weighing on the broader steel sector, saying that a number of changes could weigh on the space, including the trade tensions, weak prices, and it downgraded United States Steel stock to sell and slashed its price target to $11 per share. And looking now, that stock's falling even more today. It was trading at $38 per share a year ago, and now it's down all the way to $11.85 per share. It's just been a huge sell-off in that stock. This came after KeyBank earlier this week as well offered downbeat comments on the steel sector as well. And another name that's been punished is Steel Dynamics, ticker STLD. That was downgraded at Deutsche Bank as well. It hit a 2-year low, and Deutsche Bank slashed its price target on that stock $14, cutting it to $30 per share. So the steel sector has been getting punished due to the trade tensions and uncertainty in that space. And finally, oil prices have been on the decline. Traders are worried about the outlook for the global economy and what that's going to do to demand for oil. And oil prices have been falling as a result. We've been monitoring the Vectors Oil Services ETF, OIH, and there was actually some interesting options activity on that ETF this week. Options traders were coming in seemingly trying to bet on an uptick in that ETF, trying to call a bottom in oil prices, expecting that ETF to go higher. There was lots of call activity in the June series. That ETF has been punished severely in recent weeks. It's lost almost 30% just in the past few sessions, down around $13.50 per share. And options traders were targeting the June 15 call, so looking for a short-term bounce in this ETF. However, it's down another 2% today, around $13 per share, and that's testing its December lows. So these charts for a lot of these commodities names are just showing sharp declines. Even though some traders are coming in with bullish expectations, those have not come to fruition quite yet in the price for these ETFs. We can stay on the trade front for just a little bit longer because we just had this bombshell that President Trump is planning to impose 5% tariffs on imports from Mexico, and those could go up to 25% in the months ahead. So that is weighing on a number of stocks just today, most notably the auto sector. You have General Motors sliding, trading at fresh lows, the lowest point in months. And then Tesla has also been getting hammered. I wanted to mention that on last week's show, but I forgot. Tesla stock has just been getting crushed, and a lot of negative analyst attention around Tesla as well. So this news today on the tariffs on Mexican imports is not helping with that. And another name that analysts are calling attention to because of this Mexico news is Constellation Brands. That is the beer stock, ticker STZ. It's been selling off in recent weeks. It's got some negative analyst attention. And this morning, JP Morgan Securities weighed in saying that it could struggle based on these new tariffs on Mexico. That it projected that around 73% of that company's revenue is from Mexican imports. That is the company that makes Corona, so that makes sense. And that could be a name to watch as things heat up here with Mexico. And of course, if you all are also tracking this, the ETF you want to pay attention to is ticker EWW. That is an ETF with exposure to Mexico. And as I talked about last week, the retail sector has been getting hit hard. And two names from this space that I want to touch on this week that were also hit hard this week as well were Canada Goose, ticker GOOS, and PVH, which is the Calvin Klein parent. Both those companies both those stocks sold off, that is, this week. And it was an interesting note out of PVH in its earnings call where executives there noted a sharp downturn in tourist activity overseas that has played a part in its weak sales. So both those stocks suffering steep declines this week, just showing more pain out of the retail space. And while I'm at it, I might as well mention Gap, ticker GPS. It has plummeted to fresh lows today as well. It was last seen trading down 16%. It also reported disappointing quarterly results, just adding to the broad weakness we've seen in the retail space. It's actually at 4-year lows today. All right, a few quick hitters here before I go. Speaking of new lows, Kraft Heinz stock, ticker KHC, has been getting slaughtered. It's been on a multi-day losing streak. Consumer staples as a whole have been under pressure, and that stock just has continued to fall. It's down below $30 per share after trading in the $50 range for quite some time. We also, on the flip side, on a more positive note, we've been tracking Snapchat parent Snap. That stock has more than doubled year to date. Let's not miss that fact, and it's back in double-digit territory. Some positive analyst attention this year, so it's been gaining some momentum. And we've noted this week over at SchaefersResearch.com some interesting options activity on Snap as traders have been betting bullishly on the social media stock, expecting it to continue to rise. And in other news, Uber reported earnings for the first time as a public company, and they lost $1 billion during the time, but no one really seems to care. All right, folks, I'm going to get ready to wrap this up. That's what we do every single week. We give you quick rundowns of some recent stock market news, financial developments, and anything we find interesting over here, get you in, out, and on your way. If you like what you heard, head on over to SchaefersResearch.com. Check out our free newsletters, or check out Schaefer's on Twitter, on StockTwits, on Instagram or Facebook, wherever you would like to stay up to date with whatever we're looking at. We have a lot of good seasonal data over on the website right now, a lot of stocks that outperformed during the summer months. If you want to check that out, that was in the indicator of the week from our senior quantitative analyst, Rocky White. So I highly recommend that. Otherwise, if you could subscribe wherever you're listening or leave a positive review, that would be great. But until next time, I am out of here. I will talk to you guys next week. I appreciate you listening. We'll see you soon.